My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I've been one of my friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. No wonder Fed Chief Jay Powell went so hard about inflation on Wednesday. Today, we got still one more smoking hot unemployment number. A true barn burner of hiring. And that's the last thing that the Fed wants to see here. While the market still managed to rally, Dow gaining 402 points, S&P jumping 1.36%, and Nasdaq climbing 1.28%. People are kidding themselves if they think if they suddenly think a strong labor report is actually good for the stock market. Anyone who paid up for stocks on days like today really has no sense of history. When you bet on a scorching hot economy, you're fighting the Fed. You're not being in bed with the Fed. But that's a very bad idea. See, the Fed always wins. That's why I want to kick off my game plan for next week with what's in front of us from the Fed first. And what really matters in the absence of specific earnings, because I know that we are on some sort of crazy roller coaster. I want you to know not when to get off, that's not the plan, but when you can expect to be nauseous, when you need the Pepto. People at the office know I love the Pepto. I swig it. Probably not what you should do, but it works. Take Monday. Loretta Mester. Okay, she's right up here. She's the hawkish president of the Cleveland Fed. She's going to give a lecture, and no doubt she'll take the questions, right? You know, the Q&A. Excuse me, can I ask you something? I expect her to go ballistic and talk about the need to raise rates until the cows come home. And the cows really never come home. Believe me, I know that. I own a bunch of cows. They're so stupid, they don't even know where home is. Don't take offense. I mean, they don't watch the show. Thursday morning, we get the Consumer Price Index, and this is a data point that has been at the fulcrum of nearly every big, bad move this year that wasn't directly caused by a Fed big, bad meeting. We know some commodities have come down in price, but I bet we get still one more red-hot CPI reading, and it'll cause the market to hit another speed bump. You need to be ready for that. Now, get this. Later on Thursday, the Fed thicket finally ends when none other than, yes, Loretta Mester gets to talk again. Hey, could you tell me whether things are getting better? Why does this matter? Because if the CPI number's steaming, she's going to 1 hour Martinize this market all over again. That's a dry cleaner's phrase. I wish I were kidding about this, but I, for one, am completely tired of being obliterated by these left field throws that catch you at home plate. Now, how about individual companies? On Monday, we got this BioNTech. They report, remember that's Pfizer's partner, and the bulls have to hope that the German vaccine maker says the Chinese government has ordered over 1 billion vaccines to put an end to their lockdowns. That could trump even Mester's ruthless bearishness. And super rich people who come on our show next week, I just want to remind you that you always said that the Fed doesn't have the toughness to fight inflation. Hey, where did you go? Maybe you stopped coming on. I don't hear from you anymore. You can come back. Going back to corporate reality, on Monday we have a really important call when we find out if the consumer's finally starting to trade down, when we hear from Treehouse. Now, that's a private label food maker. If business is up for them, that tells you that the consumer's finally feeling the pain. Right now, despite what you hear, and you probably have heard it, and I've checked it and then double-checked it, there hasn't been much trading down at all at the supermarket, which is one reason why the Fed has had to stay so aggressive. If people continue to spend on, really expensive Oreos, the Fed actually gets worried about that stuff. After the close, we get results from Take-Two Interactive. This gaming company has been written off as a COVID play, which, of course, is the kiss of death in this market. I think it's a gross misjustice because Take-Two has a whole suite of games that have transcended the couch. I bet they can make a ton of money on both new and old products. Maybe this is the quarter it can finally show that it's not a so-called pandemic play. Again, I think that some companies have been pigeonholed that shouldn't be. Tuesday, we hear from Global Foundries. Okay, now this is really important because this domestic semiconductor manufacturer knows the state of chips that aren't the latest and greatest, the kind that are still in short supply for so many companies, industries like the autos. Global Foundries is not the bottleneck, but it does know where the shortages are. I want to know if they'll get better because right now the economy's going to get ugly. We want to sell those cars before it gets too tough on them. Now, after the close, Disney reports. I can't believe how many people have given up on this iconic company that is the best theme park franchise in the world. Somehow it's treated like just another hacked media company with expensive programming. Now, I don't know what it'll take to get the stock settled down, but we're ready to buy some more. Now, the Charitable Trust has a big position, but we're willing to buy some more down at 90. Why 90? Because I know people hate the stock. Does it deserve to trade down here? No, deserve's got nothing to do with it. But it could easily happen given the fact that the company is so despised. It's amazing how a fantastic company like Disney can just be given up on. But there's a powerful bear market in media, and Disney's integral to the Grizzlies' appetite. Hey, speaking of kind of somewhat like media, how about AMC? They report. And while the meme stock boosters here have been eviscerated, I don't think they really care about losing money. It's kind of a game. It's like monopoly money. AMC's CEO managed to sell a huge amount of non-monopoly money when the stock was much higher. Maybe this will be the quarter that the losing bag holders. Did I say that? I meant to say stockholders. Darn it. Maybe they make some money back, although I wouldn't put money on it. Oh, and let me make a completely gratuitous reference to Bed Bath & Beyond. Have no fear. Stocks gratefully do have a level that they stop going down. Need I say more? We also hear from Occidental Petroleum, and I'm so cynically positive on the oils that I think they'll report a terrific number, not to mention an even closer embrace with Warren Buffett, because that's what happens every quarter. Oxy trades like water. That's a street term, meaning it's one of those stocks that's furiously bid for and taken up every nanosecond. There are better oils, but only Oxy has the Buffett seal of approval. Wednesday, we get results from the controversial Roblox. There's another one that's in the pandemic doghouse. The online gaming play made a fortune during the lockdown, but never really recovered once the world went back to normal. I think that's unfair to Roblox, but this market's been so brutal that I doubt it'll get much traction, even if it can blow away the numbers. Some groups are just so hated, it just doesn't matter. The skeptics will come out of the woodwork and pull it apart, just like we saw today with, say, DoorDash, which was up $10 this morning, then proceeded to get pummeled, finishing the day up 4, but not before it finished. It was almost unchanged. Wynn Resorts reports too. Now, this is very important because this is the Macau casino hostage play. I say that because it's hostage to the Chinese irrational COVID policy. I thought the Chinese government might want to be more rational, and that's why we bought Wynn for the Charitable Trust. I was wrong. Lately, though, the stock's been creeping up, suggesting that maybe President Xi will change course. We're sticking with it for the trust, in part because the stock's already been de-risked by the extended lockdown. Thursday, we have some more companies that came public in the great era of excess. Great era of excess. Just coin that. That means the last 2 years. I prefer to view these newly minted stocks as names you can buy if you happen to win, say, the Powerball lottery. And I mean all of the companies, not just a few shares. That's how low they've gotten. Companies like Compass, the real estate technology play. Matterport, a 3-day technology outfit. The era of excess allowed everyone and anything to come public. So they did. In Toast, yeah, Toast. All right. This is a point-of-sale company. Is Toast Toast? As I've said many times. I know that when I own a bar company, after a company, when I would come in, people, company after company would pitch us a new point-of-sale system. That's what Toast does. Somehow Toast managed to convince people on Wall Street that they had a high moat to their business. Hey, Toast has a good product, but that's all it is. It's a product. And a good product does not necessarily make a good stock, as we have seen time and time again in, yes, the great era of excess. G. Great era of excess. You don't use the O. Finally, Friday is one of my absolute favorite days of the year, or at least it was for a brief period. Singles Day! Yes, it's a totally made-up shopping holiday for unmarried people, because apparently communism all turns out to be about conspicuous consumption. Marx, who knew? Groucho? No, not Groucho. We have a whole bunch of these Hallmark holidays in our country. Who can blame the Chinese for having a couple of those Hallmark holidays, right? Maybe that'll be the day when President Xi starts the vaccination process. Remember, he just approved the good mRNA vaccines on foreigners today. Gotta respect irony. Listen, we're in a wildly emotional moment that has a lot to do with how individual companies are faring and a lot to do with what Wall Street expects of them. Even more important. Bottom line, until these expectations are wrenched lower, you shouldn't feel safe in anything that you pay up for. Ultimately, you're just going to feel sorry if you don't buy anything on the big sell-offs. When the market finally gets oversold enough, though, that's when you need to pounce. And I'll let you know. Sav in Connecticut. Sav!
Jim, how are you? Jim, I love...
Sav, I'm doing great. How about you?
Great. I love dividends and I love growth. I need your opinion on Ford.
I like Ford. Now, I have to understand, Ford is about, we're going into a recession. That's usually not a good time to buy the autos, but Jim Farley uniquely understands that, and I think the dividend is safe, and it can even grow once he's been able to rationalize the process. How about Ron in Wisconsin? Ron.
Jim, booyah.
Booyah.
Hey, wondering if United Airlines is still a buy and what effect is Delta strike might have if they go on strike.
Okay, I happen to think that United Airlines is a trade, and I believe that because travel is so strong. Now, I actually like Airbnb. I've been wrong on that, but I think that over the next 5-year period, if you ever have that time horizon, that the best travel stock is Airbnb. All right, listen, you shouldn't feel safe in anything right now. When the market finally gets oversold enough, you'll need to pounce, and that's when I'll be ready to help you. Mad Money tonight. DraftKings, well, I'll help you all the time, but you know what I mean. DraftKings collapsed today after earnings. So is there more to the story than Wall Street that could be missing? I'm going to check in with the CEO. Then rare earth material company MP Materials soared today after announcing the start of commissioning for its Stage 2 assets. I'm going to get the latest with the company's tech press and explain what Stage 2 is. And the enterprise software stock apocalypse is here. But is it fair to a company reporting stronger than expected quarters like Cloudflare? You won't want to miss my take, believe me. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.